Well, good morning to you all. Tony Virtue speaking, Virtue and Partners, with our regular monthly update. And first of all, we've got clients over in the Middle East and travelling through. Everybody's accounted for and safe, and clearly that's kind of been the main news over the last couple of weeks. Does look like it's more and more contained now. Even overnight, they eliminated a couple more of the leaders of the Islamic Republic. Price of oil beginning to come down, and you can see from the graphs probably not as big an influence as there was in the Ukraine. Probably the bigger issue now is what happens now. It's all very well and good getting rid of the old regime, who's taking over, but if it is well thought through and well run, that could be a time of great prosperity for the Middle East. So let's believe that's the case. We're all watching the news, and the news varies widely depending who you listen to. But I think in aggregate, the position really is that this should settle itself down over the next few days. You can see equity markets had been an all-time high just prior to this, fell by about 5%, which you would expect in the ordinary course of events, and now just drifting back up again. Volatility in the equity markets now coming down, so probably a good news story. Not a lot of panic here in Sydney, certainly not in the clients, not an overly amount of trading going on. Just to remind you, the best thing you can do, have deep enough pockets, ride these things out and look for clarity in what is happening. Domestically, the RBA lift interest rates yesterday. It was a 5-4. It was a close decision. Data behind that was certainly pre the Middle East conflict. So, look, the reality is the federal government is spending at twice the level of income or GDP coming into the country. That is the problem. And they need to address things as the private sector has had to do. So, we go back to the interim earnings seasons. You saw Atlassian lay off a significant amount of their staff. So did Block. So did, which is Afterpay. So did WiseTech. And there really is this upskilling that has to happen and efficiency that has to happen. What you can't do is waste money. And ultimately the best thing we can do for the next generation is to get these debt levels down so they're not paying interest on the bad decisions that have been made at this time. That said, we are the lucky country. The resources sector is strong at the moment, and ultimately as we come into the budget, we should be able to get this to settle down. So maybe interest rates have risen higher and earlier than may otherwise have been the case. Outside of Japan, we're the only country in the world lifting interest rates, and the impact on that is the Australian dollar goes up, which means imports come down, which again is deflationary there. Just turning to wider news, the federal government did get these superannuation changes through. Only impacts on those of you with balances above $3 million. It does mean there'll be some planning that we'll need to do around some of that. Probably means de-risking some of the portfolios, maybe introducing more insurance bonds as an alternative. As interest rates go up, it is quite natural. The risk-free rate goes up. And we are seeing fixed interest returns now in the 7%. So, the question becomes, why do you take risk if you can get the return that you need without taking risk? So, possibly a more conservative view coming through in portfolio construction there. Property markets, you would think, would slow down as interest rates rise. That said, there's an inordinate amount of money in the system. We're seeing a lot of downsizing at the moment where people are doing this on a cash basis there. So I think the overriding message at the moment is be cautious but calm. It does look like we're over the worst in the Middle East. It does look like interest rates, yes, they've gone up twice. This may or may not be the peak of the cycle there. Certainly other countries haven't done that. We're as busy as ever as you'd expect at this time. We're very, very focused. Again, I think the key to this is having deep enough pockets that you're not forced into panic selling of anything. Markets at the moment are still only a few percent off their all-time highs, and that could drift back up again fairly quickly there. So let's look at hard data rather than emotions for making decisions. Good to talk as always with you. Tony Virtue, when experience pays.